back to another Beating Alpha episode. This is episode 153, and we have a very special guest. Her name is Evie Brooks. So Evie is an elite real estate investment educator, former advanced trainer for Rich Dad Poor Dad, and My Panama Vacation Realty founder. With 24 years plus of real estate investment experience, now specializes in all things Panama, including real estate and organic sustainable agriculture investments. She's educated and guided thousands of investors through the process of locating, evaluating, and analyzing transactions for cash flow and ROI in 13 plus countries and 30 plus states in the United States. So Brooks is currently a sought out after global speaker, mentor, coach, and trusted source to lead real estate investment webinars, keynotes, and VIP educational tours in Panama. During the global pandemic, Brooks continued to close deals every week, primarily due to soaring demand for organic smart farming investments, avocados, limes, mangoes, and more in Panama, where 85% of the foods is imported. And of course, there's more and more to cover. She's been on great shows, just like Joe Fearless, Best of Her Real Estate Investment Advice, ESPN, Think Realty, Real Estate Syndication Show, and Voice of America, and many more. And I'm very happy to have you on today on this show on Beating Alpha. So Ivy, thank you very much for coming on. I really appreciate it.
Thank you. It's good to be here.
Thank you. Thank you. And again, guys and girls, the links are going to be down below for the websites, and make sure to get in contact with Ivy about those potential investments in agriculture. But one thing that I wanted to ask you again, there's a lot of different points that we can cover today, and I don't know if an hour is going to be enough of the time to actually do that, to cover all those different things. And as I said, I'm happy that you said, somebody sent me over those talking points, and talking about the land investment is going to be very good for today. But can you take us back to the point of your own personal journey in real estate investment? Maybe you kind of tell us, how did you ended up working with the Rich Dad Poor Dad, Robert Kiyosaki company? Just, a little bit about yourself.
Well, I started doing real estate right out of college. It was just a fluke. And I ended up in the real estate sector instead of in the criminal law sector, which is what I had majored in, because of unexpected occurrences of events, and never looked back. Once I started working in that industry, I loved it. It became a part of who I was. I was in corporate America for the first 4 years in commercial real estate asset management and property management. And I stayed there for 4 years, and I hit what they call the glass ceiling in 4 years, and was told that there was nowhere else for me to go for at least 10 years. And I was like, I've only been here 4. That's not going to work for me. So I decided to go out on my own. I started investing, and that's what I've done ever since. I started right in my own backyard outside of Atlanta, Georgia, and started purchasing residential properties, fix and flips, and that type of stuff. And then I just continued to expand over a number of years. And I had a business associate friend of mine that was actually an instructor with the Rich Dad Poor Dad organization. And he called me one day and said, hey, this would be ideal for you. You need to come take a look at doing this. I'm like, I have no interest in doing that. I'm so busy. I don't have time. I have to do these deals. He's like, just come to one elite educational training weekend and sit in it and see what you think. And I said, okay, I'll do that. That'll be fun. And I walked out of there going, oh, I could do this. So I started teaching with the Rich Dad organization in the early 2000s, and I stayed with them until 2014. And it was a great experience, wonderful relationships that are still established as of this day. I have worked with a lot of the key people that's on the board of directors with the Rich Dad organization, like Garrett Sutton. We still do deals together, and he's actually invested in Panama. And also, we do all of our LLC and asset protection through his organization. We've taught side by side. Of course, I taught with a lot of the Rich Dad educators, the advanced educators, but I ended up shortly after starting to teach with them in Costa Rica. And that's how I got international. I started teaching the expat investing in Costa Rica. And that's how I ended up overseas in Central America. But when 2008 came along and crashed, Costa Rica did also, but Panama did not. So I held on and hung on, and I was one of those that you call rearranging the furniture as the Titanic goes down. I stayed for 4 years, and in 2012, I said, okay, I'm done, I'm out. And I love Costa Rica, and I went to Panama and have never looked back since. Now, that doesn't change things when things happen like COVID. That has a whole different impact on what you're doing in real estate. But I will tell you this, what goes up must come down, and real estate is cyclical. And if you know how to work in any market, you can make money in real estate. So you just have to know the strategies to use and what to look for in any type of a scenario.
Exactly. So great. Again, probably I think having a separate podcast, and maybe that's possible, to talk about Rich Dad Poor Dad and your personal journey, because, you know, I have so many different real estate investors who came on the show and they talking about the Rich Dad Poor Dad book. That was the entry point for them to start their own personal journey. I mean, and it changed millions of different people throughout the world. You know, that book is just, you know, it's cured a lot of people financially from making a lot of bad decisions.
So true. It is so true.
Yeah, it's beautiful. So I'm sure you have a big story part of that. But the question that pops in my head before we go and explore, you know, the benefits on investing in agriculture, the question is, why Panama? You know, because now you're in the United States, you know, Atlanta and Georgia. So, I mean, there's 50 countries to choose from and different investment vehicles. So why Panama?
For me, it was because Panama is closer than the West Coast to start with. I can get there and back in a 3.5-hour nonstop flight from Atlanta, Georgia. And you've got the Panama Canal. The GDP has been so strong in Panama for years. Of course, it's going to have an impact from COVID, but after 2008, from 2009, it went to 4%. It dropped to 4%. And then it went back up well over 9, 10, and then 11% at one point in time. And it held consistent at an average 6.5% GDP in this tiny little country because of the Panama Canal. And that created a dominoes effect from the Panama Canal with everything that's required from housing and construction and food and medical supplies and everything else. And they have created so many different programs in Panama for residency programs and citizenship programs. And it's an E2 country, which means that people that want to go to like an EB5 country like the United States, but they can't get there for 15 years or 20 years or 8 years because there's such a wait, they can become a citizen of an E2 country and then be able to go into a country like the United States as a resident. They will never be able to be a citizen, but they can get there as a resident, where it's going to take them years and years through the EB5 program. Mm-hmm. So we have attracted people from around the world, whether they're in a friendly nation or a non-friendly nation country, for a number of different reasons. But the fact that it's a strong economy, it's US dollar based, you've got so much opportunity. They're so accepting and wanting to bring in expats from around the world that it was just a no-brainer.
Got it. Okay. So can we talk about your personal business? Well, I'm talking about my Panama vacation, Realty.com. And of course, anybody who's watching or listening, you should go and check it out, the website, and see the resources. And I'm seeing the events option there as well. Probably doing some sort of a, virtual answer, at the moment right now. But can we talk about the rentals? And I mean, Casa Bonita, Royal Palms, and a few names for the people who are maybe, hey, I've been there before. So can you talk about the business model that you're building with this currently company, and like what type of rental properties are you offering?
Well, we started in 2012 with the expat community of people that either want to relocate part-time, full-time, have a vacation home, a rental property, and then we expanded from there. We moved into agriculture, which I know we're going to talk about in a little bit, but that's where we originally started, and we do continue to focus on that. We have a lot of pre-construction type properties that we're working on right now, very high end, but yet great pricing. Projects that are very attractive to international investors that want a like type standard of living of what they're accustomed to. And so they're able to get in with small down payment, like 10% of the purchase price. And you're looking at anywhere from $280,000 entry price up to $500,000 or $1 million, depending on if you want to be right downtown on the ocean or whatever. So you've got, you got a variation, but your price point is substantially lower than places like Toronto or Montreal or New York or, California, or Miami. Places like that. So people are very excited. And then of course, people coming from Asia or Hong Kong, places like that, the cost is so substantially lower than what they're accustomed to for apples to apples. And so you've got a lot of people that's very, very interested in a number of different things. Most of our people are looking for a potential retirement home in 2 years, 3 years, or 5 years. And what's happened through this whole COVID situation is people have been furloughed, or they've been laid off, or they were 2 to 3 years away from retiring, and they were let go because of COVID. And so they're just taking early retirement, and they're already moving to another country. And Panama has seen an influx of this. I've had a lot of sight unseen investments into condominiums and real estate residential properties so that people could go ahead and start their retirements. So whether you're only going to stay there 2 months out of the year or 6 months out of the year, or you're going to live there full time, we address all things Panama, and we help people with whatever their goals are, everything from their visa to their property management, to furnishing their units, to getting their vehicles, to setting up their bank accounts. So we help with everything, and we have all the power team members necessary in place to accomplish whatever they're wanting to do or whatever they're wanting to accomplish. So it's a full gamut of anything you can imagine, all things Panama.
Got it. So kind of turnkey service for people who are super busy and they don't have the time and clue how to figure those things out themselves. That's beautiful. So are you, like, one of the things that you mentioned is Costa Rica. So you're, as far as I do understand, you're not going to plan to move back to the country, and at least when it comes to investing or doing.
I am not going to do anything in Costa Rica. And let me explain why. Not that Costa Rica is not a great place to visit. Costa Rica is a tourism only country. And so when 2008 happened and when COVID happened, Costa Rica has gone through the same exact thing. You are absolutely out of luck if you own a property there that's tourism only. Where in Panama right now that they've opened back up 2-3 weeks ago, we can start renting our units again and having people come in with, short-term and long-term rentals. Of course, a lot of people are not traveling yet. A lot of countries are still shut down. But we have the ability to actually start renting on a long-term basis. Even if it was a vacation rental and it was a short-term rental and there's no short-term rental interest, we do have the ability to do long-term. We can do medical tourism. We can do corporate housing. We can do, international corporate businesses, because there's a big draw with the government for the multinational marketing for companies to bring their companies in. And that has been happening for the last 10, 15 years. Companies such as Grainger and John Deere and Elizabeth Arden and Under Armour, I can go on and on and on, Exxon, many, many different companies that have moved, whether it's regional, national, international offices into Panama. They bring in their corporate staff. They get all kinds of perks and benefits and tax, benefits and things like that, because that's what Panama is doing. They're trying to attract companies from around the world, and they get all kinds of incentives and benefits to do that. And of course, they bring employees with them. So it's just, it's kind of like a dominoes effect. One thing fits, the next thing, and it just continues to go down the line.
Beautiful. And again, I love the fact that you're looking towards that, because there's a lot of tension now going to the southeast, southwest. Again, you're part of the southeast, southwest. You're now is Atlanta, Georgia. So a lot of people moving, as you know, from California, from New York to the kind of southeast, southwest part.
Absolutely.
Because of the tax advantages. But there's another move that is possible for them to move to the Panama, and save more taxes and do more business. So that is awesome. So again, talking about agriculture investment, because again, as I told you before we started recording, it's a very interesting topic, and maybe you can explain for us how agriculture can generate that passive income, through the pandemic, by investing in Panama, agriculture.
Well, if you know anything about United Nations statistics and what's going on with arable land, it's becoming less and less accessible and less available. More land's getting built up for, residential living around the world, and less arable land is available. And just over the next 10 years, the demand for food is going to substantially increase because of the growth of the population. They're expecting 8.5 billion people in the next 10 years. And that means we're going from the mid 6 billion to 8.5 billion just overnight. So you're talking about a 25% increase in population. And, that's going to require a whole lot more food to be able to be produced with less land. and land is going to become less and less available. So arable land is becoming much more valuable. And if you own a piece of it as time goes along, and then by the time we get to 2050, there's going to be, you know, over 9 billion people, 9.5 billion people projected in the world population. And so it's just going to continue to drive the prices of food up, to drive the prices of arable land up. And therefore, it creates a real opportunity. And there was a brand new concept in Panama when I first found the agricultural industry as part of real estate that I had never focused on. I grew up on a farm, and I know about farming the old-fashioned way, and not compared to what they do today, you know, with the technology that they have today. But when I started realizing what the opportunities were and what the demand was going to continue to be, and in Panama, 85% of the food has to be imported into the country. So that means only 15% of the food demand in Panama is being created in Panama at this time. And so Panama is in a rush to really start creating more farming growth of food in the country so that they can be more self-sufficient and self-sustaining, because we don't know what the future holds. And so that creates a great opportunity. And so the company that I first was introduced to in Panama, now this is kind of spread because it has worked so well, created a reverse co-op because there just were no farmers to speak of in Panama. And there was so much arable land that was not being used that had been owned for generations by particular families that just, you know, run cattle, or they do nothing with it, or, you know, that type of thing. And so these companies came in and started purchasing up options for the land or purchasing the land. And there was one specific company I started working with that came in and started doing avocados and mangoes and limes, and doing what was called a reverse co-op. And what that means is a co-op is you go in, and this same company has been in multiple other countries and have hundreds of thousands of acres of land where they go in, and there's lots of farmers. They're just little farmers, and they produce produce, but they don't really have a way to get it out to the world. They just sell to their little local markets and farmers markets and things like that. So they go in and collectively bring in all those small farmers, and they become the middleman to purchase all of their produce from them, and then turn around and broker it out to the world, to Germany and to Asia and all over the world. And therefore it's a win-win for everybody. And so you create a co-op. Well, in Panama, there weren't even enough farmers to create a co-op. So they did a reverse co-op where they're buying up the land or getting the options to the land, and then finding individuals like me that doesn't want to have to go out and learn how to hoe the rows and run the tractors and the drip irrigation and all the technology. So we partner together. They sell me the land, they go in and farm it, they clear it, they put in the irrigation system, they put in the trees, they plant the trees, and they manage the farm, and they harvest the produce, and they do everything from A to Z. And I'll take 70% of the profit, and they'll take 30% of the profit. We get paid out once a year. And your IRR, your internal rate of return over a 30-year projected period of time, is going to be in the 16-17% rate over the duration of that time. And so it's just, if you're looking for a legacy investment or a long-term investment, it's really a great place to set it and forget it, because you've got somebody doing all of the hard work and the labor for you. You're just basically providing the land, and you own that land. So now you have invested in that underlying piece of arable land, and you're going to get a 70% of the profits of the produce. And that IRR that I told you, let's say conservatively 13-14%, does not even include the value of the land or the appreciation on that land over time. So it's an incredible concept.
Yeah, definitely. It's a very interesting concept. And I'm sure there's a lot of people who've been investing into land for a very long time. And again, talking about those, because this is the strategy, as you mentioned, for kind of long-term investing. We're talking, 20 years, and maybe, you have some deals who are structured for a shorter period of time, because most of the people that I have on the show, they're talking about 5 or 10 years with exit strategy, so it's a little bit different approach. But, so can you expand a little bit more when you mentioned, as one of the topics here is high return, low risk asset class. So when you're saying the high return, what other asset classes we're comparing that high return with?
Well, your agriculture is in a category all to itself, because if you have a project that can produce and return those types of returns over an extended period of time. Now, your trees will grow. We're talking about the trees right now, avocados, limes, and mangoes. They'll grow for 50 to 70, 80 years. And then all you have to do is graft them. You don't take them up out of the ground and start from scratch. You take the base of the tree and you graft in the new tree, and then it grows again. And within 2 years, it's producing. To begin with, it takes 4 years to start production. By the time you clear the land, put in the infrastructure, put in the drip irrigation, plant the trees, let the trees grow. They have to be in the greenhouse for an extended period of time, 1 to 2 years to start with, before they're planted in the ground. So those trees are already in the greenhouses. After that period of time, you just graft the trees and you start production in 2 years after that tree is grafted. It will start producing again. So you don't have that 4-year turnaround, you got a 2-year. Then we also have hydroponics, which is inside the greenhouse. You got 2 completely different business models. The greenhouse, you own the portion of the greenhouse that you purchased, but not the land, because you're talking about a small piece of land anyway for a greenhouse. So after 30 years with that, your IRRs are comparable, but it's more of a business transaction. It's almost like a franchise, if you will. It's not a franchise, but the concept, because you don't own the land, because it's just, a greenhouse is less than 1 acre of land. So whether you buy, 1/40th of the greenhouse or 1/4 of the greenhouse, you're getting the revenues off of the actual production, and you're still looking at comparable, let's say 13, 14, 15, up to 17% IRR, internal rate of return, depending on what your crops are. But you don't make a decision on the crops. The farmers do, based on what's in greatest demand for the clients that they have around the world. And they have clients like, all kinds of different farmers markets, HEB, Whole Foods, companies like that are their clients around the world. And so they're going to evaluate, because on the hydroponics, you're turning over crops every 2.5 to 3 times a year. And so you could go from tomatoes, for the first quarter of the year, and then realize there's a much greater need for berries than there are tomatoes. So you can just flip right over. But now you can't do that with the trees. The trees are the trees. If you've got avocados, it's going to be avocados, for the next 50, 60 years. Now you can take a citrus tree and change it from orange to lemon if you want to, but you've got to graft it and start all over, but otherwise, you're stuck with that particular produce. And so whether the price goes up or whether the price stays at it as it is, as far as demand and supply, you can't change that. Where if you're in the hydroponics, you can. So you've got pros and cons both ways. I'm a dirt girl. I want to own the land. I'm about real estate. I'm about dirt. So I want to own the land, but a lot of people love the concept of being in a greenhouse. It's more of a controlled environment. It's hydroponics. You get a much greater production per area of space. You don't have to worry about the climate issues outside, or, major torrential downpours or winds, because you're inside there, or pests. And so you've got, like I said, pros and cons in both directions that people look at and evaluate. And there's not a one size fits all. It's many different options for many different people.
Again, yeah, exactly. So you're giving, those people a little bit different options when it comes to land, depending on probably their own personal choice, what they're looking forward to investing. If it's going to be something, like avocados, or maybe something different. Again, and there's a slight difference in that. So talking about those type of investments, so how do people go about and invest in those type of deals? Let's say, should they expect kind of, fixed type of returns on those deals, or it's based per produce, as you mentioned, depending on how much of a product you're going to have? And how often do these people get paid? Is it like quarterly, every year? How does it work?
Okay, it is annual. You get paid on an annual basis on the first quarter of the year following the payout for the previous year is when it's calculated. And if you're in the hydroponics, this is another reason. Inside the greenhouse, of course, you start producing produce a whole lot faster than you do with trees. So your first payout comes the first quarter after 2 full years in the business, because you're going to be investing in a greenhouse that's not yet built.
Mm-hmm.
So once that greenhouse is sold, it's built, and that takes a little over a year, and then they'll start producing, and you'll have maybe 2 crops, possibly 3 during that period of time. And so the first quarter of the following year, you would have the first payout. With the trees, like I said, it's going to be 4 years. And then again, it's the first quarter of the next year. And your difference in payout with the trees is going to be slower. So you get a lower amount in year 4 and a little bit more in 5 and 6 and 7 and 8 and 9 and 10. And by 10, you're up at, ridiculous returns. But when you average that through an internal rate of return calculation, which is a complicated formula, time value of money and all kinds of things are taken into consideration, you do look at about a 15, 16, 17% IRR through the duration of that 30 years. But with the greenhouse, you're going to have a higher return in a shorter period of time. So some people would say, well, I'd rather have the cash quicker in 2, 3, 4 years than own the land. For people like myself, I'd rather own the land, because I know in 10 years, 20 years, 30 years, that land, no matter what the fruit's done, is going to be worth a whole lot more for me than just the produce. So I'm looking at it from both avenues. And I'm an exit strategy person. I like to look at what are my exit strategies, and do I have multiple exit strategies? I don't want just one. I want many exit strategies, because if plan A doesn't work, I need to be able to have a plan B or a plan C in place. Mm-hmm. And number 2, what are my streams of income? What options do I have for multiple streams of income? I don't want just one stream of income from any kind of an investment. But everybody that I sit down with and I do a business plan with, as far as what their goals are for investing in real estate, have different desires and strategies. I've never sat down with 2 people that had the same desires and goals. And so every time I sit down with somebody to do a business plan on their real estate portfolio, it's different. It's never the same thing. And so it's like putting together a whole brand new 5,000 piece puzzle. And that's what you do with every single person that you sit down with, because everybody has different goals. Some people are looking for a combination, long-term, short-term, legacy, whatever it is. And they're looking for a specific return on investment on an annual basis. And so we'll start with like a 5-year plan, and we'll back into what it is that they're wanting to accomplish, to see, based on what they have to work with financially, if it's even feasible.
Got it. So, and I love the fact that you mentioned having multiple exit strategies, because you don't know what's going to happen. Sometimes you think but until the COVID hits, or some unexpected things do happen in life and business. So having multiple exit strategies is, to mitigate the risk, is definitely great. So talking about those people still, so do those people invest as limited partners? I mean, should they have an LLC to invest for those type of deals? I'm sorry if that's going to be quite, wide angle question, but do those people, what's the minimum investment that's required? And maybe you can talk about the tax strategies that, are associated with investment. Is it going to be the same as kind of investing into traditional syndication, where you get the, write-offs and appreciation, depreciation, or is it going to be a little bit different? Okay.
So I have to make a disclaimer here. I'm not a CPA, I'm not a financial planner, and I cannot give out tax advice. What I can do is give you a generic answer that you can just pull up off the internet and find out for yourself. In Panama, you do have tax deductions for any income earned in Panama in agricultural for up to $350,000 per year. So you can have a pretty large piece of real estate that's producing a lot of income for yourself before you have to pay any taxes in Panama. But whether you're from Germany or Asia or Hong Kong or Korea or the United States, Canada, wherever, you've got your own tax laws. I don't know all those countries' tax laws, but I do know that if it's anything like the United States, the IRS has a long arm and they follow you wherever you go. And you do have a legal obligation to pay taxes based on your income. And so what I do is I personally set up LLCs, and you can set them up in Panama. You can set up what's called an SA, Associate Anonymous. And like I said, I have the power team members to help you figure all this out as far as what's best for you. I cannot give you that advice because I'm not licensed to do that. But we have all those members in place. I use US LLCs to put everything I have in all of my different properties or in different entities and different locations. And I hold all of my holdings internationally in LLCs that are United States LLCs. And there are pros and cons against to whether you would have a US LLC or if you'd have an offshore, like a Belize account or a Swiss account, or if you just have a entity in Panama. So again, every single person's situation is going to vary. It's going to be different. But what I can tell you is that you are going to have a legal obligation, if you are still a citizen of your home country, to pay taxes according to the tax guidelines and laws in your country based on the income that you earn. But in Panama, on agricultural, there is no taxable income up to $350,000 on revenue per year. And that's just an incentive to get people to invest in farming in Panama.
Yeah, exactly. So even though for some people, if it's not going to hit over the 350,000 mark, you know, even if you're going to get, let's say, you know, taxed in your country, and of course, maybe some people have their own ways to go about, have their own tax strategies, you know, in place to make sure that they can pay, you know, ethically as less tax, you know, as possible.
Absolutely.
Yeah, but at the same time, you know, it's probably still going to be more than some other investments, you know, that are out there for people, as you mentioned, you know, like North Korea, like Korea or Japan or, you know, China, that would give a similar, you know, or maybe even close, you know, type of returns, you know, in those countries. So who knows?
True.
So talking about that, I just want to bring some points up just to get some clarity here, because I just want to give some numbers, and that's again mentioned in your bio. So the soaring global population will drive increases in agriculture demand for food. So that's the United Nations predicts it will grow from 7 to 8.5 billion by 2030, and from 9.8 billion to by 2050, which is 40% plus growth over 20 years. So, I mean, we're looking, you know, like there's a lot of attention will go to that specific sector. So can you talk about, from your personal, you know, business plan or just ideas, are you planning to kind of branch out to different, you know, countries, let's say moving, you know, maybe deeper into South America, or maybe just different places, you know, across the globe where with our agriculture strategies?
The agricultural, yes, I am always looking for opportunities to bring my investor team, my investor clients, to other ag projects. I unfortunately have not found a whole lot yet. We are working with a couple of other countries right now that we are very excited about the products and the programs that they are putting together or that they are offering. But to be honest with you, this reverse co-op concept is relatively new, and I've never seen anything like it. And it's not like a private placement offering, or you do not have to be at a certain level for investment. You can get in for a very small level entry point of, you know, $45,000 to $50,000. And in the case that we're talking about now, you're talking about owning almost 2.5 acres of land for that price. So you get a nice little chunk of land that is being farmed, that's producing. And so I'm constantly on the lookout for programs that will bring that to the table for our clients. Now, we do like organic because that's a whole sector all to itself. And that's everything that we're doing right now is all organic. I have looked at some other things like blueberries that are not organic, but that organic sector of the industry is in such demand, clean, green, you know, clean eating, that kind of thing. And it does demand a much higher price for the produce and for the products. And so therefore, you're seeing a higher return on investment. And that's why I really kind of tend to go that way. But I'm always looking for programs and projects out there that would be intriguing and enticing to our investors.
Mm-hmm. Got it. And I'm sure that you have a lot of those. So, you know, everybody who's watching or listening, make sure to get in contact, you know, with Ivy and ask those questions when it comes to land investment, because it's very interesting. Again, just looking at the statistics, what you mentioned, you know, about United Nations statistics on what's going to happen in another, you know, like 20, 30 years. I mean, you know, if that's a strategy that you're looking to follow, long-term investing, again, in agriculture sector, it's definitely going to be a tremendous value there. So again, coming back to the point of you working as an advanced trainer for Rich Dad Poor Dad, can you talk about maybe some view or maybe some things that you see that the most of the investors or maybe people in general, when it comes to making bad investment decisions, and how they can fix those?
The biggest thing that I have seen throughout all my years in real estate is that people will go get the book, or a book, a real estate book, whether it's Rich Dad Poor Dad or whatever it is. and they'll read it and they'll think that they're a master of real estate, and they'll go out and they'll invest in one project and they'll lose their rear end, and then they'll say, this doesn't work. That's it. I'm done. I'm out. It's like somebody that picks out one stock, puts all their money in one stock, and they lose a big chunk, if not all of it. Stock doesn't work. You really have to have more education. And I actually really suggest that people get a mentor. That is the number one thing. If you're new to this, and if your career is to be a doctor, an attorney, an accountant, a pharmacist, in the, you know, pharmaceutical industry, I don't care what it is, and you think you're just going to turn around and jump into real estate as your second career, and you really never had any experience other than purchasing your own home, it's no different than learning how to be a plumber. You've got to learn the you know, the pros and the cons, the steps and the pitfalls and all those types of things, the strategies, the exit strategies, and the you know, all components of real estate are important if you really want to make this a success. And so if you will just, you know, hang on to somebody else's kite tail that has done it before you and follow and let them mentor you, or hire a professional mentor that can walk you through, even if it's just for 1 year, and help you do a multiple of, you know, 3 or 4 deals, 1 deal a quarter or 1 deal every other month, until you really feel comfortable that you know what you're doing and prevent those pitfalls, then you will be able to create a whole second career and move forward and have a great career in real estate.
Exactly. And that's a very great advice. Well, you know, I shouldn't expect any different, because if you know, you work with a Reach That for that company, and that's probably the strategy that they go about, and that's the way that they help all these people. But by telling them, look, you need to, again, understand how the real estate works. And as you're saying, if you're transitioning from a full-time job or having a business, even if you're having a business to a real estate business, it's still a business, but it's a different business. And there's a lot of different learning, you know, involved, because there's a lot of different angles that you've never seen before.
That's true.
Can you talk about your upcoming event on November 20th, and just talk about that a little bit, what people should expect in that event?
We do, of course, I do virtual conferences now all the time because of what has happened with the COVID, but thankfully Panama has opened back up. I've already got some of my team members back down in Panama, and just to pave the way and make sure everything's good to go. And we do VIP tours. We call them boots on the ground tours. And it's not just about real estate or real estate deals. It's about the country, the economy, the banking, what's happening in the culture. It's a very hardcore 2-day tour. And then the third day is a lot lighter. We're not pushing as hard as we do. For the first 2 days, we run hard for 14 hours all day, as hard as we can go. And it's not sitting in a classroom. We are on a bus and we're going from one property to the next property, the next property. Now with COVID, we're probably going to be split up into SUVs. And we've reduced the size of our groups to smaller groups, of course. But it's the same concept, teaching real estate, teaching these different strategies, the different projects, the different investments. It's a true learning experience. It is a boot camp going in to learn about not only real estate investing internationally, but real estate strategies that no matter where in the world you are, if you implement these, they are going to help you have success in your real estate strategies. It's a program that we will take couples or single people. It includes everything from the airport transportation. We will pick you up when you arrive at the airport and take you back to the airport for your departure. And your food is included for the first 2 days of the tour, and the breakfast on the third day. Because on the third day, I actually sit down with all the clients individually, one-on-one, and we'll do a master plan for that person individually. It's more private type of a situation. So everybody else is out at the pools or going out to the Panama Canal Museum or whatever they want to do, going deep sea fishing. But we schedule times throughout the day that afternoon, that's all I'm doing is meeting with people individually. So they do have that third day to be able to explore and experiment. And you can come in as early on the day before the tour as you want and explore and relax and vacation and stay the day after as well. So you've got a 4-night accommodations, which is in an extremely nice condominium location. We have 2 different locations that we use. One is in downtown Panama that overlooks the ocean, and one is the building I live in, Casa Bonita. Right now, Casa Bonita has not allowed us to open back up to put anybody in that building. So we're using the U property off of Avenida Balboa, and that's a great location. So both locations, beautiful. You can't find a better location, better view, or, you know, experience in Panama. And it's just it's a great time, great learning experience, and you really get a feel for Panama. You get to go to the farm, you get to go to a lot of different projects, and then we talk about the strategies, the entry strategies, the exit strategies, and every kind of project that you can imagine, so that, like I said, it's not one size fits all. We don't have one developer, one project. We have many projects. In fact, depending on the crowd, we don't go to all the different projects that we represent. We customize it based on what the group is looking for. So
here you go, here you go. So it's going to be a great VIP event / vacation time, you know, 4 great days. And, you know, you talking about the food in there got me hungry a little bit myself here as well, because I do imagine it's going to be a great time for the people. And again, make sure and go and check it out. My PanamaVacationRealty.com /events for that November 20th event. That's going to happen 4 days. So again, I mean, you're doing a lot of different things when it comes to, you know, first of all, helping people. First of all, again, coming on shows like this. So I really appreciate you, you know, coming on today and sharing your wisdom, your strategies, approach, mindset. I mean, different pieces of why people, first of all, should invest in, you know, agriculture type investments, and again, vacation rentals in Panama and everything that's related to Panama. So this is phenomenal. I mean, it's really great. So the question I wanted to ask you, do you have a kind of personal legacy that you want to leave behind you as well?
Say that again.
Do you have a personal legacy that you want to leave behind you as well?
Well, my legacy is I'm an educator at heart. I never realized it until I started teaching with the Rich Dad organization. And so being able to really reach out and make a difference for other people and help them to accomplish their dreams and goals. Now, I'm not an educator in the sense of, you know, 1st grade to 12th grade kind of education, but working with professionals. And professionals that typically know their industry like the back of their hand, and I could never even compete with them, be it a neurosurgeon or, you know, an attorney. But at the same time, I know real estate, and when I can help them understand real estate and how to be able to implement that in their life, whether it's just as, you know, a passive type of a situation or whether it's a second career, that is truly what I enjoy. And I love doing that. And that is my legacy for my children as well. I want to leave that with them, and be able to know that when I leave here, that I have set them up, as well as a lot of other people, that's going to be able to pass that along for generations to come. So that's really my passion.
That's beautiful, and that's a great passion, and that's a great legacy to have, you know, passing on to your children and children. And again, it's just those ripple effects that are happening, you know, all over the place. So that is beautiful. That's awesome. Appreciate it. So guys and girls, I just want to ask you one thing before we're going to go. If you share this episode with a friend of yours, and of course, the best case scenario is for the people who are looking to learn about, you know, agriculture investments, kind of, you know, vacation rental investments in Panama, or, you know, they're looking to invest in those type of, you know, investment assets, make sure to pass this episode along. Ivy, just personally want to say big thank you again for coming on today on the show and sharing your wisdom, strategies, techniques, and reasons why people should go and invest in these different, you know, asset classes. So I really appreciate it.
My privilege. Thank you for having me.
Thank you. Thank you. Again, guys, make sure to send this episode along to your friends. And as always, I'll see you next time. Thanks for watching.